Welcome back, everybody. It's another episode of Let's Move Austin. I'm your co-host, Chris Angel, here with your host, Teresa Bastian.
Hello, everybody.
Yay,
Hi, Chris.
Teresa. It's like a reunion. It feels so good.
Well, there's a lot going on in the real estate world, and I felt like the best way to get information out to people was for us to reunite and get a couple videos going with the current info.
I think so. We'll call this like the coronavirus edition. We're going to be like,
oh gosh, I guess. I mean, it's pretty relevant. It's what it is.
It's what prompted this. And I think a lot of the topics we're going to do in this next 5 episodes is really around like all the different circumstances and symptoms that are coming up because of this and as it impacts real estate.
I've been getting a lot of questions, so I do think it's information that people want to know.
Totally. Well, today we're talking about forbearance, or how do I pay my mortgage, right? I mean, can you define? So the question is, how do I pay my mortgage? Is that right?
Sure. Yeah. I mean, there's we're over. I mean, I don't know how many million, because it changes every hour. It seems like people have filed for unemployment.
Mm-hmm.
A lot of small business owners, they're not going to be able to file for unemployment, but they're still struggling. Right. So the question on everyone's mind is, how am I going to make my mortgage payment?
Right.
And the federal government, as of this content is of April 24th. Maybe there's a way to list that on the episode somewhere,
mm-hmm.
but we're filming this April 25th. So this is the most current information I have. Mm-hmm. The government came up with a thing called the CARES Act, mm-hmm. CARES Act. And that offers some relief for all federally backed mortgages. As you know, Chris, not all mortgages are federally backed, but most of them are. So
is there a way to know, like, how do I know if my mortgage is federally backed?
There are a couple websites that we'll link to in the show notes, okay, where you can actually go on and find that information out.
Okay, cool.
Okay.
All right.
Yep. That's the best way, is just to look it up case by case.
Okay.
But the number one thing the CARES Act offers for relief is forbearance.
Mm-hmm. Okay. And which is what? Like, how do you define that?
So forbearance, literally the definition is, it's a temporary postponement of your mortgage payments. Mm-hmm. And it's granted by your loan servicer to you instead of taking your property into foreclosure.
Got it. Okay.
So the key thing to remember here is, it's actually an official program. You have to, tell your servicer you're in trouble and start the process. You can't just decide on your own you're going to not make your mortgage payment.
Right.
That doesn't count. Okay. So it starts with you communicating.
Yeah.
And the other thing is, it's a postponement, not forgiveness.
Meaning they tack it on the end of the mortgage, or? See,
that's the big wild card. Right. There is no uniform directive how the mortgage holder handles this forgiveness.
Okay.
Some mortgage
or forbearance.
Right. Some servicers are tacking the payments on the end. Mm-hmm. Some are giving you, say, 6 months without payments, but in the 7th month, they're all due, like a balloon payment.
Ooh.
Yeah.
Immediately, like not on the end, a balloon payment on the end of the mortgage, like in 30 years, but like on the end of the forbearance.
On like month 7.
Oh, wow.
So if you're unemployed and you took 4 months to get a job, the chances of getting all caught up in 7 months are probably pretty slim. And that's why I'm here. That's why I'm compelled to get this information out. Yeah. It sounds like a great deal, and it's better than nothing.
Sure.
But it is not a wave a magic wand opportunity for most people. You need to really look at the fine print.
So I guess the alternative, So that makes me think of the alternative, which is if you don't do a forbearance and you can't pay your mortgage, then the alternative is to go into foreclosure. Like those are your.
Well, there's another alternative.
Yeah.
Which would be, if you have equity in your home, you could sell it.
Right.
Maybe you walk away with $20,000, $40,000, $60,000 in your pocket and start a new life, as a renter, or maybe you move to a family. Everybody's situation is different.
Good.
But there are options. Forbearance is the one the government is talking about very loudly right now.
Yeah.
But I'm just saying, slow your roll, everybody.
Yeah.
Look at the fine print. It may not be the best option for you.
Right.
Okay.
Right. Yeah. Really good.
Do you want to hear a little more about it?
Yeah.
Okay. So first of all, do you have an idea of how many U.S. mortgages are already in forbearance? Like
yes,
month?
1 million.
No, 3.4 million mortgages. 6%
are in forbearance or foreclosure?
in forbearance.
Oh, wow.
People, there are 3.4 million mortgage holders that have already called their bank, their loan servicer, to say, I'm in trouble, put me on the program.
Wow.
And that's in the first month. So
Wow.
we expect that number to go up dramatically.
Yeah.
Okay.
Right.
So here's, I'm not trying to be negative. I'm just saying we have to think it through all the way. And that's being that I am in the real estate industry, I think these things through. So Chris, let's say, can we use you as an example?
Yeah.
I don't know what your mortgage payment is, but could you pretend it's $2,500 a month?
It's $2,500 a month.
Beautiful, thank you. I love round numbers in my mortgages when I'm doing math on camera. Okay, let's say you enter a 6-month forbearance program because you've been impacted by coronavirus, okay? Oh, I should say, you don't have to prove you've been impacted by coronavirus. You might still be working your job and not have any income loss. You can still get a forbearance. There's no paperwork required. So that's a fun fact that I don't agree with, but
right.
Okay, I'll put that aside. Let's say you were.
Okay.
So in your 7th month, so your 6 months, no payments, month 7, guess how much you owe on your mortgage that month? Don't try.
$12,000.
$17,500.
Oh.
Yeah. Yeah. That's a lot to like think through, right?
Yeah.
So let's say that you can't make that payment and you call your servicer, you work out a payment arrangement. And that servicer is very generous. They say, okay, fine. I'll take, we'll take that $15,000 for your 6-month missed payments.
Yeah.
I'll let you pay it back over 12 months.
Okay.
Sounds good, right?
Yeah.
I mean, sounds better than the alternative.
Better than the full amount.
So you've got your regular $2,500 month payment plus an extra $1,250. So now your mortgage payment is $3,750 a month.
That's pretty steep.
Yeah, especially if you've been out of work, you might be behind on some other things too.
Even if I'm not, I don't think most people live with a big cushion in their monthly. I mean, most people.
Yeah, to go from $2,500 a month to $3,750 is a big jump.
Yep.
So that's what I'm trying to say. People need to think through, not just, great, I have a couple months of a break, but what is the plan for getting this back on track?
Yep.
The debt to income implications are huge. So you, Chris, when you qualified for that loan to buy your house, you were making, let's say, $6,000 a month in income.
Yep. And
your payment was $2,500.
Right. So
you had a 42% debt to income ratio.
Right.
After this repayment plan kicks in, where your mortgage goes up to $3,750, you're now at a 63% debt to income ratio. And that's not counting any other debt, just your mortgage.
Right.
Now, let's say you were out of work, but you got hired, but your new job only pays $5,000 a month instead of $6,000. Still got the $3,750 payment.
Right.
Now you make $5,000. Yep. Your debt to income ratio is now 75%.
Yeah. And what's the impact of that debt to income ratio? Like, why does that matter if I have the mortgage?
It's not a matter of qualifying for a new loan per se.
Right.
Okay. But it's an industry standard for judging whether someone can afford what their payment is.
Right.
And when you start getting to a 75% debt to income ratio, in mortgage terms, we consider that you're an imminent default risk. I mean, the ability to keep paying 75% of your income for just your mortgage, it statistically doesn't happen.
Yeah.
So it's very risky to get in a position where this is, what you think is going to help you. Right. In the long term, it can really drag you down.
Yeah, big time.
So for someone in that situation, or Chris, since this is you now, I might strongly consider, what are your options for possibly selling that house if you have equity? Maybe buy something smaller, maybe rent, scale it back, get something that's in your control instead of trying to keep this house at all costs where it may spiral your other expenses out of control.
Right. Yeah. Yeah. That's really good. I think especially coming off of the big real estate boom we've had there, I would imagine a lot of people have equity if they've owned for any length of time.
So far, I've talked to two homeowners that have lost jobs due to coronavirus, and they've asked me to do an evaluation what their options are for selling. One of them has 80,000 in equity, one has 50.
Wow.
So for them to put those homes on the market, make peace with it. It's
Yep.
difficult when it's
Right.
not necessarily your first choice to move right now.
Yep.
But for them to do that and unlock that cash when they need it most is the smartest decision.
Yeah. A
Rather
relief. What
than,
a relief.
yeah, and right now interest rates are low, people still are buying homes.
Right.
We don't know in 6 months if that will be the case.
Right.
So holding on to that house at all costs, you may not be able to unlock that equity in 6 months.
Right. Yeah. Yeah. I mean, this whole financial unknown, this economic unknown that's looming in the future, we don't really know. Right now, conditions are relatively positive for.
Well, here in Austin, we've had such a lack of inventory for so long
Right.
that we are still seeing homes sell. We're seeing multiple offers on homes.
Wow.
So it is possible to still sell your home pretty effectively and efficiently.
Yeah. Yeah.
Don't have a crystal ball, a lot of moving parts, but as of now, April 25th,
Wow.
it's an option for most sellers.
Yeah. Really good. Wow.
Okay.
That's so great. I think sometimes we get so sidetracked by the drama of news that it's hard to see the options. It's hard to even think through the options,
Right. And just human nature is you tend to grab on to stability.
Right.
But long-term stability may not be keeping this.
Right.
Yeah.
It's really good. I love your level head in the middle of it all. Like, it's so helpful to have someone come in with just some levelness about.
Well, I think that's, Chris, we've known each other a long time, and we both worked together through the 2008 mortgage meltdown and all the things that were thrown at homeowners and the real estate industry during that time. And I think that, if you're working with anyone that's made it through that time, they know a lot, they've learned a lot.
Yeah.
And there's a lot of expertise to offer clients.
I wanted to ask you more about because we did go through that. That was such a crazy time, a Great Recession, where a lot of people didn't go into forbearance, they went into foreclosure, and they had to do short sales and all the different stuff. Like, what was your experience with that? And is it like most agents haven't been around long enough to have had that experience?
Right. We see a lot of agents enter the real estate industry when the market is hot.
Right.
So most agents, I would say probably over 75%, were not licensed 10 years ago.
Right.
And then you couple that with Austin was not hit as hard as some areas of the country. We were practicing in Washington State, Seattle, Tacoma area at that time, which was hit a lot harder. So you're right, though. We didn't see forbearance then. Most people that were in the crisis, they had the adjustable rate mortgages. They had no equity was the problem. So people were walking away from their homes. They had nothing to make if they sold the home.
Right.
So,
yeah.
So slightly different scenario, but the impact of being a real estate professional and assessing what the industry and the changes in the economy are going to, bring for your clients.
Right.
That is a skill that is, absolutely relevant from then to now.
What, how did that time in the 2008 time sort of prepare you for this time? Like, how did it qualify you for this? Because this is a whole new animal we're about to step into.
Yeah, I think it taught me to look at, different, like what do you call
mile markers, guideposts,
when you're on the freeway and you see and so kind of look ahead instead of what's right here. You keep your eye on the horizon. I'm doing a lot of I'm not paying attention to the coronavirus news as much as I am what's happening at the Treasury and what's happening with Fannie Mae and Freddie Mac and the mortgage side of things, because that all works together for the economy.
Right.
That's where it's going to impact my clients most.
Yeah. Did you there's something to that whole, I remember as an agent, I didn't like the details of those things. it was overwhelming for me, and I was an agent. It's a whole different process to and set of details to
Well,
go
I like
into
that.
these things. I know.
That's why I'm a nerd.
Thank God for people like you. Right. But I don't think a lot of agents are, but I do think that there is something about knowing how lenders think, knowing how underwriting processes work. Even you already talked about debt to income ratio, and knowing how some of these benchmarks are going to affect my financial solvency or my ability to sell this house and buy a new one if my debt to income gets out of whack. Like, I just feel like there's a lot that you learned.
Well, yeah, and thank you. And I do like digging into the details. Would you like to hear what I think one of the pain points that potential pain points that we could run across?
Yes, don't hold back on me,
Okay,
Teresa.
this is what I'm worried about. Okay, this is what I'm worried about. Okay. So all those people that have their loans in forbearance right now, they're not making their payments. Well, that's just not free money. Like, someone is holding the bag for those payments, or some company.
Right.
So I'm going to walk you through how this works. You know, when you get your mortgage, you go to your bank, or you call the mortgage lender, the guy or the gal that your realtor told you to call, and they quote you an interest rate, and they talk to you through the transaction pretty much. Okay. So that's your lender, right?
Right.
The lender helps you get the loan. Well, after that, it goes, there's an investor or a bank that actually had the money. That person you talk to doesn't have the money.
Right.
But the guy at Bank of America, or the gal that's the broker, that bank purchases the loan from the lender. That's how they make money. Okay. Then the bank sells it to the servicer. When you get your mortgage or you buy your house, everybody jokes like, don't write, 12 addresses with that, because they're going to sell the loan. You're going to pay somebody else.
Yeah.
So the person you end up paying, or the entity you end up paying, is called a loan servicer. Okay. And really, the servicer, their whole job is to ensure that ongoing payments are made.
Yeah.
And then they bundle those loans and sell them. That's how they make money.
Okay.
So
such a weird industry. Okay.
I know, but okay. So the guy you talk to get the loan, he doesn't really have the money. And then the person you pay isn't really the person with the money either. So just go with it.
Yeah,
Ultimately, though, that servicer, that company you write your mortgage check to, they've made an agreement to pay a monthly fee to an investor or a bank for that loan. So let's say your $2,500 a month payment.
Yep.
They have to pay $2,350.
Right.
So they're only making a tiny amount every month on your loan, but they're paying the majority of it. Well, Chris, what do you think happens when you're not making your $2,500 a month payment because you're in forbearance?
Right. They don't have the money.
The servicer still has to make their payment.
Yep.
And get this, 40% of servicers are not banks, meaning they're not taking any money in any other way.
Oh, right. Uh-huh.
But they still have to make that payment.
Yep.
Do you see a flaw in the system here?
Yeah, I see a big pothole coming in the road.
That's what I'm worried about.
Yeah.
So when these companies I don't know that if they go under, or if they need to be bailed out by the government, or whatever happens, it's going to be a major hiccup in lending.
Yep.
Okay.
Yeah.
And we're already seeing some lending requirements getting stricter. Okay.
Right.
The jumbo loan market is almost frozen. Very hard to get a jumbo loan right now. Certain mortgage programs have been eliminated. Stated income, bank statement programs, down payment assistance programs where up to 100% is financed. We're also seeing reduced seasoning periods for foreclosures, short sales, and bankruptcy. So it's harder to get a loan now.
Right.
Also, credit score requirements have gone up. And this is recent. For FHA, credit score was 580. It's up to 640 now.
Wow.
And that's a much higher rate. They want it to be 660.
Yeah.
That's almost a 100-point jump.
Yep.
So if you're fortunate enough to want to buy a home, but your lending requirements are now too strict for you to qualify because of this meltdown with the forbearance, you're not going to be able to buy.
Right.
if you're not able to buy, guess who is not able to sell?
Right. Yeah.
So that's what I'm watching. And that's why I say you might want to unlock your equity now if that's an option for you, because I don't know what it's going to look like 6 months from now.
Right. Right. Yeah. Good
So,
point.
sorry, I know that's kind of in the weeds, but
I like it. I think I like it. I think that when you think about the, it's what's the thing where it's like, you can't time a market. And those who are like, oh, I'm going to time when I'm going to sell. So that's like, by the time you know to sell, it's too late. You're like, oh, the best part would have been back then.
Yeah. Yeah. I have to agree with that.
You can see, I remember learning years ago, the whole concept of leading indicators. Like when you look at an economy and you see people starting to spend more money on a retail card, like a Sears card, a Macy's card, people are starting to feel like they have more disposable income. And that's an indication early on that the economy is shifting up. But
right.
Things like this are early indicators that, like the tightening of lending guidelines,
right? But the housing market is potentially poised for contraction. We're not there yet, at least not in Austin. I'm only speaking for Austin specific.
Right, but people are trying to minimize damage right now by doing all of these early indicators of ratcheting down lending guidelines and all the stuff. So
it's kind of like on the federal level, if you look at the mortgage industry, it's a lot of people are saying like, is this cure going to be worse than the disease? Not talking about coronavirus, but is giving someone with no proof the ability to get 6 months of no mortgage payments.
Right.
Is that going to be a bigger problem down the road?
Well, that's the question I wanted to ask was like, what do I, the homeowner, do with this conversation? Like, am I supposed to is it better for me to take the forbearance because it gives me more cash flow in the short term?
So first of all, I would say if you are having trouble with your mortgage payments, I'm sorry that you're in that situation. I've been there myself personally, and it sucks. So there's no other way around it. This isn't something you could prevent. But get into action. Number one is call your mortgage servicer. So whoever you write your mortgage check to, call that company. Most of them have increased their call volume hundreds of %. So be prepared to stay on hold. It's just going to be a patience game. Mm-hmm. And when they ask if you're experiencing hardship due to coronavirus, say yes, and then see what they offer you. I would make anyone, whether you're my client or not, I will review the offer with you so that you have someone from the real estate industry helping you understand the fine print. And if you want to talk about other options, we can. If you just want to understand the bank's option, happy to stop the conversation there. Got it. But it's very important, if you're in that position that you already know you're struggling to make that mortgage payment, call, get the options so you can know what they are. From there, every situation is unique. You may need to know, do I have any equity in my house? What would it look like if I sold? Where would I go if I sold my house? If you want to have those conversations, call your trusted realtor or me. Happy to help. I really am.
Yeah, it sounds like having a plan and just seeing what my options are is really the first step. If you're like,
it really is. Don't put your head in the sand. I mean, it doesn't feel good to be in this position, but nothing good will happen if you ignore it. Yeah.
Wow, that's really good. So this is this is pretty comprehensive. I know, and really good. I love that it's not just, an Instagram quote, like it's okay to, forbear your house. Like there's some meat here and some depth to the things to think about. And I appreciate that you brought that to the table. Well, if people want to reach out to you for that plan and for that perspective, how do people connect with you?
Well, my email address is on the screen, and you're welcome to just call me or text me. I'm home a lot these days, as most people are. My number is 512-297-3442.
Awesome. Teresa, thanks for a great episode. I look forward to the next 4 episodes in this series caused by this exciting and unpredictable time we're in. And so until the next time.
Yeah, we're going to get a handle on Chris.
We're going to get a handle on it. Thanks, Teresa. See you next time.
Okay. Bye, everybody.